Okay, in this video, I want to talk about how I'm going to handle getting assigned some shares on a cash secured put of NVDL, which is the double leverage ETF for NVIDIA. And you can see that a week ago, it was trading almost at 90. And then today it's all the way down here to 75. And today hasn't really done a whole lot except for going sideways. And if I scroll down here, I see it's NVDL 75, lots of red in the market here today. So what I'm hoping for is that this will just continue going sideways or up a little bit. If it goes down a little more, it's no big deal. And what I wanted to talk about is how I'm going to manage this, because I have an expiration for tomorrow for 5 contracts of cash secured puts at the 82 strike price. So I will probably end up buying 500 shares of NVDL for 82, and the price today is at 75. So on paper that looks horrible and everything else, but this is actually just part of the process of doing the wheel. And when I do the wheel, most times 90% of the time, I'm just selling cash secured puts over and over and over. I don't know if you want to call it a modified version of the wheel or just the way it works out. I don't know what you want to call it, but I like doing cash secured puts because if I decide I don't want to do cash secured puts on NVDL, I can take that money and do cash secured puts on something else. Let's say like TQQQ. So when I get assigned the shares, my only choice is doing a cover call on NVDL. So what I want to talk about is that a horrible thing or am I okay? So tomorrow I will probably get assigned shares. If I punch a 0 in here, meaning that this cash secured put will expire, and so this will go down to 0. And let's go ahead and put in tomorrow's date. Let's assume that it's Monday, okay, or Saturday. So I'm looking at this after it expires. So I'll end up with 500 shares. This will go to 0. I will have made $690 from this cash secured put. But on the other side, now I own $41,000 worth of NVDL, but I actually paid 82 for it, but it's only worth whatever it's going to be worth at $74 or whatever. So I'm not really worried about that $74. I'm still looking at this $41,000 number here. So let's look into Fidelity. So we're assuming I'm buying these at 82. So let's open up Fidelity, and I got the option chain open here. So tomorrow is February 6th. So this is relevant for any time of the year. We're assuming that you're getting assigned something and you're doing like a weekly options on it. So this is just an example. And none of this is financial advice, by the way, in case I forgot to mention that. I'm just sharing what I'm going to do to make the wheel keep turning. So let's get rid of the February 6th because that's tomorrow. That's when I'll probably get assigned. And I'm looking at cover calls. So at this point, I'll be doing cover calls on my 500 shares. So let's do 1 week out. So I'll probably just keep doing the same thing. I'll just keep doing weekly trades. I'll be selling cover calls instead of selling cash secured puts at this point. So what I don't want to do, I don't want to do a cover call for less than what I bought those for. So I bought them for 82 now. So let's go down here and look at the 82 strike price right here. So if I click on sell at 132, this here pops up. And let's pretend I'm going to do 5 contracts. I'm going to do the February 13th expiration date, 82 strike price. And if I click on this here, you see the midpoint is like at $1.57. So let's go ahead and go with that. We're assuming that we can sell a cover call and get somewhere in the midpoint. That cover call will make me $789. What I wanted to kind of look at, I was making $700 a week on the cash secured puts, and I was like totally happy with that. That's like a 68% annualized return. And if I could do a cover call back to here and make $780 on a cover call, I should still be happy. So even though the price of NVDL has gone down from, let's say, like 88 when I sold that cash card put like a week ago. And actually, if I pop in here, so it was $92 when I sold that cash card put, and now it's 74, 75. So I could be really sad that it's gone down, but what my purpose is for this is to generate income for my retirement. I'm not looking at this as a long-term investment. I want to generate money each week or each month to actually live off of. So I'm looking at those shares of stock not as an investment so much as more as a tool or an asset, like maybe it's a rental house. It's something that I'm using to generate money. It's a part of the business. It's a business asset. So that's how I'm looking at it. And for a lot of people, generating $600-700 a week off an asset could be enough to satisfy what they need. I got all these other trades going on too. And the reason why I'm looking at the NVIDIA is because it's actually expiring tomorrow. So those are the ones I'm going to be dealing with. So I should be okay with it. Now, will this exact premium be $81 for the week come Monday? I don't know, probably not, but it should be still somewhat similar. Maybe it might be $600. I don't know. Now, if I wanted to, I could actually boost the strike price up to 84. So in other words, I'm thinking of getting a little bit greedier. So I have 500 shares. So if I go to 84 strike price, and let's assume that this NVDL goes up to 84 or higher by the following week, which is the 13th, and then I get these shares taken away from me at 84. So not only will at that point will I make, let's go ahead and click the midpoint here. So at this point, I'll make $600 on the income, the premium from the cover call. So that's one way I'll make money. The second way I'll make money is $2 per share for the 500 shares that I have, assuming that this will go back to 84. Now, I don't know if it will or not, but if it does, that will be $1,000. So if I add the 1,000 to the 600 here, that'd be $600 profit for the week. And so that looks better than the 780 or $800 approximately. So whatever it does between now and tomorrow expiration, I don't know. I hope it doesn't go much lower than 74, but if it does, it does. What it is, what it is. But I just kind of want to share what I plan on doing to manage this trade. The only other trade I have expiring tomorrow is 2 shares of SoFi. I already own some SoFi and I'm selling cover calls on those, and everything else I have will expire on February 20th or March 20th. So I'm quite a ways away before I have to worry about those. I have a whole bunch of stuff that's going to expire in a couple weeks. So we'll see what happens with all this stuff, all this Robinhood stuff I'll end up owning probably. So I'm hoping that Robinhood bounces back to at least about $90 a share. I should be able to do cover calls at a 110 strike price and make enough premium to be profitable. The 121 here might be a little trickier, but we'll wait and see what happens with that on the 20th when I get assigned, if unless Robinhood does the miracle and goes back to 110. So delete those until tomorrow and we'll see what happens. So just wanted to put this video out for a lot of chatter on some Facebook groups I'm on about the world is coming to an end, the sky is falling. But in reality, this is like what it does. This is what happens. So anyhow, if you like this type of thing, go ahead and subscribe and like the video. And this is not advice at all. This is just me showing you like what I plan on doing if I get assigned those shares and just flipping around and doing the cover calls, part of the wheel. And we'll see you in the next video.